Hey everyone, welcome back. Happy New Year. Um, this is the Lunar New Year, by the way. If you don't celebrate Lunar New Year, that's okay. Yeah, so in this video today, I'm gonna be talking about a couple stocks that I'm gonna be selling put options on, and these are companies that I am bullish on. Today, I'm gonna show you what the trade will look like on Option Strat. Okay, just to kind of, for those who like to visualize how the trade will play out, if it goes up or if it goes down. Option Strat's a great tool to use for that. Okay, so I'm going to show you a couple of different stocks that I'm planning on selling puts today or this week, and I'm just going to go ahead and open up my Robinhood account. Okay, so Robinhood, I'm taking a look at some put options for TX. But let's start with a cheaper stock. Okay, so we're gonna go with BGFV. Okay, so BGFV. Let's see here. Okay, so I actually started selling BGFV put options last week, and it did fairly well. Went up about 7%. If you take a look at the year chart, so BGFE is a short squeeze stock, so it could potentially go up very, very, very high. But also, I actually think this is a stock that is trading at a very reasonable price right now, just because the P ratio, the price to earnings, is trading at 4.27, so that's very low. They do pay a dividend yield of 5%, so that's great. Market cap is not huge, so this is definitely considered a smaller company. $439 million. As you can see, it went up to $44. I think I sold. I had bought some call options. I sold at the $30 mark, so I could have gotten some more money. But guys, a lot of times you just really can't, time the market. And so I'm really happy that I got out of it. But as you can see, it went down quite a bit in the last couple months, and right now it's trading below $20. So I do think this is a great time to get more exposure into BGFE. And even if you don't want to buy stocks, this is actually another great option, and that's just to sell put options. Okay, so we're going to take a look at BGFE. Okay, so BGFE. Sorry about that. Okay, so BGFE, as you can see, if you sell put options, you can sell options 1 month, 2 months, 5 months, whatever. But I'm actually gonna sell a year out, just because even though, yes, I wouldn't mind exposure into BGFE, but I'm actually also trying not to get assigned. And if I do get assigned, I want to collect as much premium as possible. So this is a strategy I talk a lot more in depth about. Using interactive brokers where you can use margin, and even if my collateral is tied up, that's what a lot of people are worried about. I'm completely fine with it because I can use that money. I can literally go, interactive broker sends me a debit card. I take it, and then I literally just go and withdraw cash. I can spend it on, I can, pay my credit card expenses. I can do whatever I need to do using my positions, using if I use interactive brokers. Okay, so check out interactive brokers if you get a chance. I'm not going to talk too much in depth about that today because I've talked about that a lot. But just taking a look at if I sold put options right now on BGFE at the $19 mark, guys, I would collect $580 on basically a max loss of 1320. So that is, I can't do math off top of my head, but I think that's around 40% returns. Okay, so if PGFE goes down to $19, I may not get signed away, guys. Like that's something that you have to know. If it dips underneath $19 tomorrow, I may not get signed because the option buyer paid so much premium for it, right? So they're not gonna just release these shares if it falls just a little bit. And so that's why I'm more than happy to pay for BGFE at $19 if I'm getting paid a premium of $580. Because at that point, right, the stock would really have to go down about 32%, 33% for me to start realizing a loss on this trade. Okay, so And you do your own research. There's not, any kind of financial advice. BGFE is just a company that I've looked into. I think it's a great sports store company. I do think they have plenty of cash, and so that's why I'm willing to get more exposure into the stock. Okay, so let's take a look at what it would look like on Option Strat. Okay, so a lot of times, Option Strat, again, just a tool that is very helpful if you are trading options. It just kind of shows you what it would look like. And then I'm just going to show you how it works. Okay, so let's go ahead and sell the put out to January 20, uh, 23. Okay, so next year. And as you can see, right? So really, the only time you can really lose on this trade. Okay, so we're selling a put, and we're selling it at the $20 mark. Okay, so actually, no, we're selling at the. Let me see. We're selling at the $19. Okay, so $19 mark. Okay, guys. So as you can see, yeah. So BGFE, there's so much green out here, right? The max profit is 580. If you don't get assigned, if nothing really happens, if the stock just continues to go up or even moves sideways or even goes down a little bit, you're gonna make the max profit of $580, as you can see, right? But if the stock goes down, below I don't know, like $15, at that point, then you would start to realize a loss, right? Now it says here you can lose, you can experience loss if it goes down to 1940, but it's not true because you already collected the premium, right? So you collect the premium up front. And guys, this is insane, right? Like even if it goes down to 15.90, okay, $15.90, after I don't know, like December, you're still collecting $232. So you still made a great premium on this trade, even if it goes down 19%. Okay, so that's the first stock that I'm taking a look at, and I'm probably gonna go ahead and sell a put option on. Next stock ticker is, okay. This is in the coal industry. Okay, so it is Peabody. Okay, so Peabody has had a lot of turmoil in the last couple months. There's a lot of talk about. Oops. Let me There's a lot of talk about like debt and essentially the company coming out of bankruptcy. And this company, guys, do your own research, make sure you know what you're getting into. I do think that this company is still a company that is going to have a lot of prospects for 2022. I do think it's going to as you can see, the stock is actually down quite a bit in the last couple months, but I do think there's a very high chance that it's going to continue to grow from here. Do your own research. I'm just going to leave it at that. Let's take a look at what it would look like though to sell put options. Okay, so let's say we're bullish on BTU, or even if we think it might trade sideways, or it's just not going to go much further down from here. Okay, so if we sell put options out to January 2023, right now, if we open up the trade at $10, so it's pretty close to the strike price, guys, we can collect $310 off of collateral of 690. So that is basically what we're saying is, okay, if BTU falls down below $10, we're willing to buy 100 shares at $10, but we're collecting $310 to open up that trade to sell that insurance. And because we collected so much premium, guys, the amount of collateral we would need to open up this trade is $690. So we're collecting almost 50% on the amount of collateral we would need to open up this trade. So BTU would have to fall 36% for us to actually start realizing a loss on this trade, right? Because then if BTU goes down after we get signed, we still would have to account for the profit that we collected, the premium we collected when we sold the insurance or sold the put option. And we're making just insane amount of money for the amount of collateral required for BTU. Okay, so do your own research, check out BTU. But I really just want to show you how much premium you can collect off of the amount of collateral you would need to open up this trade. Okay, so next stock ticker is Okay, so stock ticker BXC. Okay, so BXC. Okay, so BXC is actually a stock that I've been trading for last year. I'm really happy because it went up in October, shot up all the way up to $95, $96, and in the last couple months it's gone down back to $71. Okay, so this is a company basically in the steel industry. Okay, so right now it's trading at a really low P ratio of 2.90. That is very, very low. The whole steel industry has gotten hit quite a bit, and so that's why you're seeing a lot of volatility and a lot of downside recently in the steel in companies that are more centered around steel, especially in some of the companies located in Brazil, like PBR, Petro, something I can't really pronounce it. Stock ticker MT, TX, Vale. Okay, so these are all companies that kind of work in the steel industry. Even X, okay, stock ticker X, which by the way is another company that will be great to sell put options on. Check it out when you get a chance. But we're gonna take a look at BXC. So BXC is slightly more expensive, but I'm gonna show you how much premium you can collect off of BXC. So right now, if we do, let's close this out and let's open up BXC. Okay, so Blue Links. Okay, so Blue Links. Right now, if we sell the put out all the way January 2023, we can collect about almost $2,000 off of a collateral of $5,000. So that's a great return. That is over what 30, almost 40% returns. Check it out if you open up the trade to 2024. Okay, so now we're collecting 2,600 off of a max loss of 4,000. So that is definitely over 50% of the collateral you would hold. So guys, if you don't mind collecting 50% returns on a company with a very, very low price to earnings ratio, then I would definitely consider selling put options for BXC. Average year averaged out, that's still about 25% return per year on this company that I don't think is gonna just really gonna go anywhere. I do think steel still has a lot of growth prospects. This is not a huge company, but 695 million is also not very small. It's not, it's sizable enough to where I do think the stock can do very, very well. And even if it doesn't do well, guys, check it out. If you look at option strats, let's look at option strat right now. So we're taking a look at BXC. If we go ahead and sell the put option to January 24. Okay, so we're going to go to January 24. And we're going to, okay. So we have the strike price at, I think, $70. So, okay, so let's see here. Okay, so there it is, $70. So as you can see, right, if the stock basically doesn't go below $60, okay, we're gonna make very, very good money. We're still gonna make over $1,600 on this trade. That is insane, guys. If and one thing I want to just reiterate, because a lot of people ask about this, is can you close out the trade before this option expires? Right, a lot of times when people sell put options, they want to sell short-term put options because they want to go ahead and collect the entire premium. And the answer is definitely yes. You can get out of the trade much earlier. You can get out of trade tomorrow. You can get out of trade next month. You can get out of trade next year. And as so long as the stock is up, okay, if the stock is not down, then the option contract is going to be worth less than what you paid for. Okay, so in other words, you can close out the contract by buying back the contract. Okay, so at that point, the contract value would decrease, or the amount that you would have to pay for it would decrease, and you essentially make a profit because you sold the contract at a higher premium than what you paid for to close it out. Okay, if that makes sense. Okay, so that's basically how it works. I just wanted to kind of show you what it looks like on Option Strat. These are just three companies I'm taking a look at for today. I'm going to continue to post more videos on companies that I'm selling put options on. And guys, the reason why I'm selling put options so far out, it really is because 2022 has, I think, it's going to be a lot of volatility in the market. And so I want to open up positions to where I can collect great premiums. And if I do get assigned, then I want to make sure I collected, a significant amount of premium before I get assigned. And that way, it just allows these companies a lot more downside before I start to realize a loss. And to me, guys, it's just basically saying that, okay, I'm happy with 30% returns, and if the stock jumps up to 60, 70, 80%, I'm completely fine with that, right? I would have taken my 30% returns, and I'll walk away with it happy. Okay, so I hope you like this content. If you want me to make more videos like this, make sure you smash that like button, subscribe if you haven't already. And until next time, guys, I'll see you around in the next video. With every star